Welcome. Today, we're taking a direct look at BlackRock, ticker BLK. We have this
Oh,
detailed report right here.
that's right.
And our goal is pretty straightforward. Just
Yeah.
pull out the most critical insights, the stock analysis, price targets, financials.
Exactly. Give you a clear, efficient understanding of what really matters. You're here for the essentials, so we'll cut right to the core.
Okay, so to kick things off, BlackRock. It's a huge publicly traded investment manager.
A real giant.
Works with clients all over the globe, right?
Huh.
Big institutions, pension funds.
Insurance companies, mutual funds, endowments, governments, sovereign wealth funds, corporations,
Huh?
but also intermediaries and just individual investors too.
So a really wide net. And they manage, well, pretty much everything. Stocks, bonds.
Yep. Equity, fixed income, balanced portfolios, plus mutual funds, those popular ETFs, and alternative investments like hedge funds, real estate.
And they're involved in global risk management, too.
Yeah.
Advisory services.
Correct. They invest across basically all markets: public equity, fixed income, real estate, currency, commodities, alternatives. Founded back in '88, HQ in New York, but like you said, offices everywhere.
What immediately jumps out about a company like this? The scale.
Oh, absolutely. The scale is staggering. The report mentions they just hit a record $11.6 trillion in assets under management, AUM.
11.6 trillion. Wow.
Yeah. Think about what that size gives you, cost advantages for one,
Yeah.
but also just immense market presence and influence.
Hard to compete with that.
Very hard.
So how does that connect to their stock?
Right.
The report has a price around $854 USD. Recently saw a bit of a dip, down about 2.5%.
Right, that's the snapshot figure.
And then we see these other numbers. A fair value initially put around $935.90, but then later the report mentions a fair value estimate closer to $997.97. And the price used for the BUI recommendation was $880.06. Which one should we focus on against that $854?
Good question. It can be a bit confusing. I think the most relevant comparison right now is that current market price, the $854, against the analyst's updated fair value estimate, which is around that $998 mark.
Okay.
The $880 figure was likely the price right when they finalized that specific recommendation section. But the key point is consistent. Both fair value estimates are significantly higher than where the stock is trading now.
Gotcha. So there seems to be a gap. The report also mentions BlackRock has a wide economic moat. We hear that term a lot. What does it mean for them specifically? What makes their advantage so strong?
Well, several things build that moat. We already mentioned the massive scale, that $11.6 trillion AUM. That leads to cost efficiencies.
Right.
Then there's their globally diversified platform. They aren't reliant on just one market. And network effects play a big role.
Network effects.
Yeah.
Like the more clients they have, the better they become for other potential clients.
Exactly. More clients mean more data, deeper insights, a stronger track record, which attracts even more assets and talent. They can also negotiate better terms. Plus, they offer such a broad range of products and services.
And it's not just static, right? They're actively strengthening this.
Definitely. The report highlights strategic investments in tech, private markets, active ETFs, even digital assets, and recent acquisitions like GIP and Prekin, plus the upcoming HPS deal. These all aim to widen that moat further. Strong client relationships are key too.
Okay, so this wide moat,
Yeah.
it seems to be showing up in their recent performance. Q1 2025 looked pretty solid.
Very solid, yeah. Record AUM, like we said. Revenue was up 12% compared to the previous year, hitting $5.3 billion.
Driven by?
Mostly organic base fee growth, some market impacts, fees from the GIP transaction, and their technology services revenue is growing too.
And bottom line.
Operating income up 14%, diluted EPS up 15% adjusted. They also pulled in $84 billion in net inflows.
Wow, where did that flow into?
Across ETFs, private markets, and what they call systematic active strategies. So yeah, management sounds quite confident, despite, general market uncertainty.
Looking forward then, where are they focusing for growth? What are the key drivers?
They seem to be really pushing into areas less tied to day-to-day market swings. So private markets are huge: infrastructure, private credit.
Okay.
ETFs remain a focus, especially active ETFs and the newer digital asset ETPs. Technology services continue to be important.
And those acquisitions are playing a part.
Absolutely. GIP and Prekin are boosting private markets and data analytics, and that HPS deal, once it closes, is expected to really bulk up their private credit AUM. They're also looking longer term with things like AI infrastructure partnerships and their joint venture in India, BlackRock.
Makes sense.
Mm.
But of course, we should probably touch on the other side too. Potential risks,
Headwinds.
always important. Yeah.
Yeah.
Market volatility is the big one. A recession could really hit their AUM and performance fees. That's standard for asset managers.
Geopolitical uncertainty is another factor. Could capital start shifting away from U.S. markets? Maybe. Then there's competition. The ETF space, for example, is getting tougher. You see fee cuts from competitors like
You
Vanguard.
see pressure.
Exactly. And even though they're buying back shares, which helps support the price, a broad market downturn could still negatively impact performance overall. Things to watch.
Okay. Now let's swing back to the analysts. We mentioned that fair value estimate around $998, significantly higher than the current $854 price.
Right.
And the average analyst price target over the last 6 months is even higher, around $11,167.50. The report lists some recent actions too. Looks like a mix, some raises, a couple of lowers, but generally tilted positive. Michael Brown at Wells Fargo raised his target. Benjamin Budish at Barclays lowered his slightly.
Yeah, it shows analysts are actively watching and adjusting. But that average target being so much higher than the current price suggests a general feeling that the stock is, well, undervalued right now.
And the report also mentions their capital management strategy. They invest in the business first, then return cash to shareholders.
That's the gist. Dividends and share buybacks. They bought back $375 million in stock in Q1 25.
Right.
And they plan to continue that pace, at least $375 million per quarter for the rest of the year, based on the report.
Which signals confidence usually.
It typically does, yes.
Hmm.
Shows they believe in their profitability and view their stock as a good investment while still funding growth.
So putting it all together, the report lands on a BUY recommendation for BLK.
Correct.
And the core reason seems to be that the current market price just doesn't fully capture the strength of the business, these strategic moves they're making, and the long-term potential.
Exactly. They see that gap between the current price and the fair value estimate as offering an attractive risk reward for someone looking long-term.
The analysis basically paints them as this dominant player, strong moat, smart strategies, solid results.
That's the picture, yeah.
So for you, the listener, the key takeaway here is this suggestion that BlackRock might be trading at a discount compared to what analysts think it's worth based on its strong fundamentals and growth plans.
It's definitely a point to consider if you're looking at the financial sector for long-term investment.
And maybe a final thought to mull over. How will BlackRock's big push into these less market-sensitive areas like private credit and infrastructure and their moves in tech and digital assets, how will that actually shape their future performance as the whole financial landscape keeps evolving?
That's the multi-trillion-dollar question, isn't it? Worth thinking about.
Absolutely. Well, if this focused analysis gave you some valuable insights and you want more deep dives like this one, please do subscribe to our YouTube channel.
Yeah, hit that bell icon too so you don't miss out.
It really helps us keep bringing you these breakdowns, giving you that knowledge you need quickly and efficiently. Thanks for tuning in.